day. Ira Epstein with your metals market wrap up, and boy, what a day for you metal bulls. Look at the gold and the silver. Yay! All right, we were talking today is March 3rd, 2020, 4:30 p.m. Central Time. So what happened this morning? I had to wait at home. I wanted to get the G7 out of the way before I put out my morning subscriber video. I'm watching what they did, and actually I was happy. The Fed had not committed to anything. They came together with a cheerleader statement as a G7. Then, about 2 hours later, the Fed comes out with a preemptive move. Now, they haven't done anything like that since 2008, and they cut interest rates by 50 basis points. It was not a total surprise because on Sunday night, the market was already on the Fed watch page at the CME, getting close to 100% probability that we were going to get a rate cut. Now, whether it was today or at the upcoming FOMC meeting, didn't know, but we were that high in the percentage. So the Fed did a 50 basis point cut, shot bullets out of its gun, if you will, leaves them with a percentage point before we go negative, and there'll be arguments should they have done it or not. The pros and cons are not for me to decide. They did it, so that's the end of that. We saw we saw the 10-year note go down under 1%. First time in history that's ever happened. So you're getting the impact, and you have to wonder, is it meant to cushion the stock market? Because when you get yields down so much, investors that need yield to retire and so on, they go looking for them. And you're not going to get it in a 10-year note at 1% or under. It hit 0.99 today, and tell me that you're overcoming what little inflation we have. That's what they ended up doing. The Fed's argument is that they're trying to prevent an issue down the road because nobody knows about this coronavirus. I was watching the president's speech today. His news conference is the right way to say it. And as you know, they're making great strides, but they're a year away before there's a vaccine. They were making that ultra clear. They can get into testing in as little as 3 months. They're able to duplicate certain parts of this virus, but then they've got to go through all their testing. Not everybody's our FDA, remember that. So some countries might be able to go quicker. But when you look at the gold and silver, they responded to the interest rate cut. That's what's going on. As for the volatility in the stock market, it's off the table. It's insane. So if you're trying to catch it and you're just a volatility trader, I'm sure you're having a ball. For the average person, it's very, very difficult. A $50 move in gold, you don't get them all the time. You don't close with a $50 move all the time. You got one. Silver got dragged along, copper down. But let's go to the chart. In the chart action, you close today at 1644.40. Now, it's only Tuesday. We're not at the end of a week. The prior high week close was 1645. We are knocking on the door. That's one of the reasons I like to use every now and then a weekly chart of closes instead of the highs and lows. Keeps you in the game as to what the noise isn't doing. The market's in an uptrend and it has upside bias. The daily charts, they're full of a massive amount of noise. You just go back a week and a half ago. You were up near 1700. You fell back to about 1565. Now you're back up $100 from there. I mean, that's pretty wild moves. The swing line is bearish. You still have a pattern of lower highs and lower lows. What negates that is taking out 1662.50. Where are we in relation to the 18-day average of closes? The market is over it. Now, if we take a look, yesterday the market fought at that number. The day before it fell through it, you're fighting. Now, it wouldn't surprise me if the market pulls back to that number at any point, but that's $37 from here. Let's assume it doesn't. Let's assume you just get up and over 1662.50. For just the sake of discussion. You'd have then a higher high and a lower low. Let's assume the market drops back down and closes under 1607. You keep the uptrend with the bias down. That's how I'm looking at the market. Those are all the parameters. This is a bit too volatile for my type of blood. When I look at Bollinger Bands, let's assume you take out 1662.50. Well, the next Bollinger Band right now, it'll probably go up a little tonight, is 1676.5. We had a breakout before, but it came from very tight sideways action. This is a complete different pattern of sideways action in Bollinger Bands than where you're at right now. But the market's enamored with volatility. It's enamored with what's going on in the stock market. It's looking hard at 1% interest rates in the U.S. The ECB's probably going further deeper in the cuts. The Reserve Bank of Australia's cut their interest rates. It's going to be bank after bank after bank. The race to zero and beyond is still very much underway, and people are worried what's the value of their currency as this keeps going on. For that reason, it's very hard for me to be bearish on the metal markets, because I think long-term, the gold market in this environment has a lot of value as a fundamental play. In the slow stochastics, the downside momentum was still pointing down yesterday. Today, a different story. Now it's narrowed out. That's why I wouldn't be surprised if you just want to play around in here for a bit. I've been saying I wanted to do a gold update in my videos. Each time I've wanted to do it, I've had to go through one of these major events, and I don't want to go through one of the events. Now the Fed is out of the way. So now the question is me getting the time to put one out, and I will. In the gold-silver ratio, this is not bullish silver. This is still silver as an industrial metal. That's what it's saying, and gold just running away on it. And as you can see, the silver chart has a little battle ahead of it. Even if it gets a bounce, all it did is get under the lower Bollinger Band. You only stay above it or below it 5% of the time. You got a lot of resistance between the 100-day average and the 18-day average up here. And this is such a broad swing from 1900 within 2 days, 3 days, 4, 5 days later, you're at 1640, and you're trying to play a market that's gone between 1900 and 1640. Normal bounces can carry you anywhere, so be cautious with that. Copper, I like this. Look at this sideways action that's building in here. This is what I called a trader's delight. Now the question is, which way is it going to break out for the next big move? So this is on my radar scope. In the platinum, you're still in trouble on the downside. But what's happening here? Well, if we look at the readings, they're both under 20 today. They were under 20 yesterday, the day before. You have what's called an embedded reading. So there's two things. Number one, on the rallies, I'm still looking for the pros to go short until that reading's lost. So I think they'll sell rallies, trying to cover at Bollinger Bands if they get the opportunity away from that. Number two, when it's eventually lost, then I'm going to look for price to make a run to the closest of the 18 or the 100-day average. I'll decide from there what I'd want to do. I don't know what the chart pattern's going to look like. But again, this is on my checklist of things to watch. In the palladium, you turn bearish today. You now have the lower highs, the lower lows. So let's assume it's a fake move, okay? Because we've seen so many of these against the 18-day average of closes in it. Number one, it's a $28,000 margin per contract for the full-size contract. Keep that in the back of your mind. But even if it gets over 25.76, right up through here, you have a lower low, higher high. So I think the bears grab control of this market for the first time in a while. Could they be wanting to aim this market down here? Anything's possible, but they grabbed it, and I look for resistance at that 18-day average. Last in the dollar index. I know I'm an older guy with a broken record, but whenever I get to a Bollinger Band, that's my first support level. I'm looking for pros, take money off, and when I see the combination of a 100-day average with it, as much as everybody's bearish, I'm just not joining in that camp. This is where I think support's starting to show up in these markets, and that's what I think. Did you close well under it? Of course you did. You were down pretty hard today, but you've pulled that string hard. I am not a contra-trend trader. I think that when you get good rallies, the pros will still be there to sell the market. That's how the game seems to be going. But again, in about 6-7 days, you've gone from near 100 to 96.87. Keep in mind what you're getting into and what the risk associated is when you get into these pulled out affairs. I hate them. For those of you that get my market letters and so on, I'm talking to my subscribers. This is a free offering if you haven't tried it. You'll find out I am not bashful. When I think you should keep your money in your pocket, I'll say stay in cash. I don't know a lot of people that write market letters and do that, but I am one of them. My letters are short and simple. They are not a paragraph, so don't get me wrong. They're going to lead you right into the reports of the day, the reactions as to what's going on, events you need that relate all to the commodity market. I'm not into politics. I could care less about all that. We deal what we have to deal with. I'm not going to write tonight and criticize the Fed. They did what they did. It's unimportant if I agree with it or agree with it. What's important is analyzing what went on. So what you get in my research, if you haven't tried it on a free trial, you get the morning subscriber video, which I also have a separate subscription to. You get my written commentary. You can get the commentary only by itself after you've got the trial. That's a subscription. Or the full package, which is everything that I offer. And that includes the special reports I'm going to get back into. The reason I haven't done any special reports recently, the volatility is so large, I don't know what to do one on. How's that for truth? Go to our website. Under free offers, you'll be able to read about it and sign up for it. You can click up here. It'll take you there. The best way in the morning, talk to my staff. They'll get you set up right away. I'm Ira. You have a good day.